Hey guys, Boris, last one BK Forex. Welcome to our Forex Daily Technicals for 9/18/13 tech levels for the FOMC meeting. As always, trading foreign exchange margin carries a high level risk for every single formal investor. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, going to be probably a very quiet session tonight as all focus turns to FOMC, of course, tomorrow. But we are looking at pretty well defined levels, I think, in all the key pairs as far as this event goes. This assumes, obviously, the event is going to be volatile, that we are going to get some kind of resolution one way or the other on pro-dollar, anti-dollar forces. For now, though, the euro is effectively in a 34.50 to 32.50 wide ranges if you want to sort of handicap yourself to a wide range. And on a narrow basis, obviously, 34 to the top side is the key first breakout level, and 33 to the downside would fill the gap over here and would be the key downside level. And as you can see, one of the more interesting things, this means absolutely nothing, of course, if we have a dovish Fed tomorrow. But what you can see here is, at least pre-FOMC, the market is certainly skewing dollar in a sense that the euro just refuses to make fresh highs. It's actually failing at making lower highs continuously here on a lower triangle here. And that could signal perhaps more of a downside action than an upside action. We'll have to see, of course, how the FOMC develops tomorrow. For the time being, though, very tight, very quiet action, but with key levels here at 32.50 as the large break, 33.50, 3300 the initial break, to the top side 34, and to the further upside 34.50. 34.50 would really signal a very weak Fed announcement, something to the effect of we're not tapering today. We don't know exactly when we're going to taper. It's just a complete change of market sentiment that would push dollar much lower. So we'll have to see how that trades out. In the meantime, the dollar is also looking relatively well bid on the yen side here, with 99 holding pretty steady. This basically sort of underneath 99 was a double bottom that kind of got tested, and now we're just kind of holding around here. 99.50 was the key overhead resistance in the overnight trade, just couldn't make it through. The really big level is still this 100 level. We failed once, failed twice. Need to not just close above it, but really close clear the 150. Once we can close and clear 150, that puts us much more on path towards the 101.50, 102 level, which is where we really sort of stand off of the near-term swing highs, not the ultimate highs, which is around the 104s, but that would put us in a much healthier position. As I said, when you're looking at the lows, oops, what happened to my chart here? My chart just kind of got away, so let's try it again. My chart disappeared for a second. Bear with me. I'll load the charts one more time. Oops. Just one more second. Sorry for the delay, guys. Charts. Here we go. Come on. Okay, excellent. So the charts are back. I'm just going to bring it back to you. Just 1 second. Just bear with me. Okay. So here's a dollar yen chart one more time. We're going to look at this on a daily basis, obviously. And let's pull it up again. Okay. What was interesting about the yen chart is that you still have higher lows, and that pretty much, if you look at this channel, pretty much contains an upward bias channel here, even though the yen is, of course, at the lower end of that channel. So a move through here to the top side would be bullish, but it would have to stay about 150 to kind of close to give us a true clean breakout signal. To the downside, it's 98.50 is the first minor support, but the real big support is 98, which that breaks to the downside, it really opens up a double bottom test of 97. So that's yen in a nutshell in terms of moving up or down depending on the dollar strength as we go forward. Cable is really very clear and very cleanly defined in the sense that this 160 level is just ominously holding over here. Now, it's either a pure rejection of the 160 and we're just going to fade to the downside. Obviously, tomorrow is going to be a big resolution of that. or if we can just clear, then it opens up a run all the way out to 162s. So cable's certainly been a very, very strong performer, but it's also been a very parabolic rise. And one of the interesting things when you look at cable in this parabolic moves that it's made is there seems to be not always, but certainly recently, pretty serious and clear corrections all the way off. So where could the direction come off over here? Certainly all the way to 58 is the near-term support, but the real full move to the correction could be 157. So 160 to the top side is the key break, and 150, really the break of the 157.50s here would really signal a much more negative construct and could push us all the way down to the 57s, even the 56 test over here. That's cable, and it also provides some very, very clear direction. Lastly, Aussie is essentially in a 92-94 range, if you want to think of it in terms of round numbers. It had a pretty powerful day today. It's actually yesterday. It held, bounced off 93 quite well, but it failed in front of 94, and it really needs to clear 94 in order to make this ultimate big move towards the 95 level. 95 level is obviously psychologically a very big level, very likely lots of long-term corporate and hedge fund offers at that level. So it would have to really have some very serious, powerful momentum behind it in order to clear all those moves. Otherwise, it's a dip back, but a dip back likely probably only to the 92 level. The thing about Aussie that I think looks much more constructive is the fact that it's made a double bottom, it broke above this double bottom, and unless it actually breaks 92 to the downside and dips all the way back into the 90s, it still remains a mildly positive construct for the time being. So that's the levels ahead of the FOMC. Let's hope it'll be volatile, because one of the more interesting, and of course Murphy's rules of law of the markets, is that very often when everybody focuses on a big event, the event sometimes turns out to be a big dud. Let's hope it's not, but in the meantime, at least we know where the levels are and where to look for as we trade. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg.